This is an update and technical analysis on Bitcoin cryptocurrency here off the monthly interval. Each candle representing a month here. We have this primary trend line really off the 2011 lows here. Plenty of reaction to validate it. We put in a huge divergent high with negative and bearish divergences constructing on both the RSI and oscillator. We don't have that divergence on the MACD, but we do have a beautiful crossover over an overarching crossover and a breakdown here. Now this month is has been very volatile, and close, we are the 11th of May. So by the end of this month, we will have a very good deal on a potential sell signal here on the monthly. Now, if this closes on a perfect candle red solid close, that will enact a sell signal here on the monthly without no doubt. And here, maybe a potential on a backfill the gap here at that 14,000, we'll call it 14,185. But yeah, that's how we have here really on the monthly time frame. Again, this is as good as it really gets as far as a solid monthly candle close here, and a 3 black crow pattern that we have put in effectively here on the monthly. And usually 3 black crow pattern has a higher probability of panning out, usually in the sense of a candlestick trend change. We'll zoom in here on the weekly. This is where your dollar cost average price targets will be met. Again, huge negative divergences, steep negative divergences, but here on the weekly on all 3 indicators, crack down below its zero line and crossover of both the oscillator and MACD. Again, huge, beautiful validated trend line here off the Mt. Gox crash lows, plenty of reaction to validate it, huge divergent high, steep and negative divergences that had continued to construct, and we snapped it, cracked that 50 weekly moving average, put it in an advance block, followed by a 3 outside down bearish pattern, and it has been nothing but a sell off here on the weekly. Got your advance block, followed by a 3 outside down bearish pattern, crack below, cracked that 50 weekly moving average off this primary trend line off the Mt. Gox crash lows, and here we are sitting and trying to hug out that 30.87.9 price support. Gives me that head and shoulder looking type of fill here as well. Your next target would be that 21,829 price support, which will be the 200 weekly moving average, where you could dollar cost average. You could dollar cost average here if you think there's going to be a whipsaw up effect right back above that 30.80.79. But again, pretty risky. But again, it would be ideal. Why not to dollar cost average ever lower and say that fact. So we'll zoom in here on the daily, each kind of representing a day here. We have a potential divergent low with the potential divergences, bullish divergences that could start to construct here. It's not for certain, but again, here we go. We had bounced. I had mentioned a sell signal right here off this primary trend line here. I called a right off the MicroStrategy video sell signal, and took us down 21% down to that 0 fibs retracement at that 28,938. Whipsawed right back above it, and here we are sitting right back in there again with the divergent low with potential bullish divergences. Now the oscillator's already starting to undercut, but we've got that crossover. Again, we're on the skin of his teeth when it comes to divergences here on the daily. If the daily divergences, bullish divergences, positive divergences start to burn out, and we burn out this divergent low, then again, I think it'll be a huge move down to that 21,830, and we'll see if that ends up playing out that way. Again, copy these charts. These are your dollar cost average prices down to 12,674, 67.22, 3,138, 813. What's even really more significant about this primary rising bearish wedge pattern off the Mt. Gox crash lows is that even a solid crash here down to that again, there's going to be a huge battle right up with that 14,000, 12,000. I mean, right up with that 12,674 should be a huge battle. Should have a sort of a reaction. Might be good for a day swing. If not, maybe we'll melt right through it. Maybe we'll put in a bear flag here, and again, if we even crack down to that 6,072 price support here, as ugly and as bloodbath as that sounds, and as crazy as that sounds of a correction, you would be fearful of ever even buying another Bitcoin. and Fed ends up stomping out and lower, and they start screaming uncle, and the Feds come to save the markets, then again, this would still be in a long-term downtrend, making a series of lower lows and lower highs. So again, that even right back at that 6,722, maybe we could even crack down below 3,138, take it down to 3,138 and consolidate here. That's still an uptrend. Where things would start to get worrisome is probably a crack of that crack of that $813, and then I think you'll put a long-term secular bull market to shame, and start to hurt some of these technical indicators even more here in the weekly. And again, that's where things will start to get pretty bad. But again, if you're a long-term believer in Bitcoin in the future, as far as 10 years out, 20 years out, these are your price targets. These are all your dollar cost average price buys here, buy zones. Your buy zones, 12,674. These are all your buy zones, the dollar cost average out. And if you enjoyed this video, hit that like and subscribe button.